Pinterest shares falling in the after hours. The stock coming back after sinking as much as 28%, but still down. The social media stock reporting a miss on revenue, but getting a bit of a boost after announcing an ad partnership with Google. CNBC's Julia Borson joined by Pinterest CEO Bill Ready in a CNBC exclusive interview fresh off the call. Julia, take it away.
Thanks, Melissa and Bill. Thanks so much for joining us today.
Thank you, Julia.
So much to cover here, including this new partnership with Google. But I want to start off with your earnings because you did have an earnings beat, but revenue fell short despite the fact that you added far more monthly active users than anticipated. What was going on in this quarter?
Yeah, so we're really proud of the quarter that we put up. As you noted, we saw one of our best user growth quarters ever, accelerating to 11% growth, best quarter since Q1 of 2021 on the user side. And on revenue, we've seen solid acceleration through the year, more than doubling our growth rate on revenue in Q4 versus where we were at the start of the year. So really strong acceleration there, is at the midpoint of our guide. But one of the things that we're really excited about is that as we continue to launch more performance ad products, we more than doubled the number of clicks we send to advertisers in Q4. They don't really shift budgets a lot in Q4, particularly with that being the holiday shopping season, but we've delivered a lot of value there, which is why we're seeing acceleration as we look into Q1, which was reflected in our guidance. And so we're off to a strong start in Q1, and we see more of that acceleration trend continuing as we look into next year.
You've certainly implemented a lot of changes since you took over as CEO, but I'm watching this stock. It's down 9.5%. Bill, I hope you can address some of these concerns of investors who anticipated even stronger revenue guidance in the first quarter. The fact that your average revenue per user is lower than anticipated, particularly in the U.S., speak to investors' concerns.
Sure. Well, I think it's important to separate expectations that got pretty lofty for us and for others in the space over the last month or two from the business fundamentals. And if you look at the business fundamentals, we are executing well and have strong fundamentals that are accelerating on every single dimension. Users we already talked about that are accelerating. We just put up our best user growth ever, or best MAU number ever, accelerating user growth, accelerating revenue in the back half, growing depth of engagement with users. Margins are expanding. We promised 200 basis points of margin expansion for 2023. We delivered 660 with more margin expansion on the way. So as you look at the fundamentals of the business, those are all strong and accelerating. And there's a lot of tailwinds still in the business, both in terms of the value capture from things we've already delivered, like the doubling of clicks to advertisers in Q4, as well as the continued progress on third-party demand, where we see our Amazon partnership scaling and performing well, and we're bringing on new partners like Google to help us on the international front.
Yeah, so explain to us this new partnership with Google. Why are you focusing with them just internationally, and should we expect that partnership to expand to here in the U.S. as well?
We really think about third-party ad demand as a way to round out our auction. And so we started that with Amazon. We're quite pleased with that. It brought a great buying experience and a great product catalog that's additive to our users. We're growing engagement even as we increase ad impressions. So showing that those ads can be great content for our users. So we're quite pleased with that. You asked about ARPU earlier. ARPU has been a highlight for us. We've grown users really rapidly. And when you look at the ARPU growth, if you decompose international versus U.S., international is even stronger for us on user growth. But so many of those international markets for us are completely unmonetized. And so that becomes a drag on ARPU. And so we think bringing on a great partner like Google that's present in those markets can help us to address the international ARPU. And we have a multi-pronged approach. We're also working with resellers and agencies in those markets as well.
And just a quick final question here, Bill, before we're out of time. On the earnings call that just wrapped up, you talked a lot about artificial intelligence, how you're already using AI to target ads and content, and with some more features in the works. Give us a sense of how AI might start to impact top-line growth this year.
So AI is already driving great top-line growth for us. AI is a core competency for us. I've talked about on past calls where our large language models, that are 100 times larger than they were a little over a year ago, have driven a 10% improvement in relevancy for users. So as we're giving users more relevant recommendations, that's driving our depth of engagement with users. It's why we're winning with users broadly, particularly with the next generation. Gen Z is now our largest, fastest growing demographic. We are winning with Gen Z. And we're seeing that AI capability play through in giving them great recommendations, great new content types like collages that we talked about, improving the shoppability, and it's driving through on the ad side, where when we look at driving greater impressions while still driving up engagement, it's because that AI tuned on our really unique signal of users that shop on Pinterest, telling us what they're interested in. That's letting us make better and better recommendations, more and more of that shoppable content being ads. That's driving really great returns for advertisers, which is why we're seeing really large, sophisticated advertisers shifting more and more budget to us, and shifting from experimental and social budgets to performance budgets that tend to be larger and more durable. So AI is a core competency and driving great results for us, and is a key part of why we see acceleration as we look into Q1 and into next year.